Hi everyone, today we would like to talk about the current development of management accounting, and we are here from group 4. And here is our member. I'm Gay Lim Jia Yu, this is Ng Si Yan, this is Sheikh Isfahan, and this is Wong Kip Peng. And we will now start to talk about the change in business environment.
The business environment has changed rapidly through the decades. Customer demands and requirements have changed, and new technologies have encouraged new firms to enter the market with better and affordable products, and subsequently created trade to existing firms. The pleasure of management accounting and organizational change may come from the environment of the firm. The most obvious environmental factor is market competition. Organizations which operate in competitive business environment tend to change their management accounting practice and strategy in order to succeed. For example, the organization's ability to sell abroad and to compete against imports change managerial and business practice, forcing change in management accounting. Technology also becomes an important aspect of management accounting. New technology will lead to a change in cost structure. Since manufacturing technology becomes more advanced, the management accounting also becomes more complex and sophisticated to cope precisely with the manufacturing process. Tight global competition associated with advanced manufacturing technologies has prompted the need for better cost management, which can be achieved by adopting appropriate management accounting. Furthermore, high education of customers also will affect the development of management accounting, as customers will compare the product price with different companies by using their knowledge. Therefore, if the company fails to properly utilize management accounting, it will susceptible to lose their customer, and it may affect the reputation of the company as well. So the change of business environment to affect the changes in management accounting. Now, let's look at the evaluation in management accounting.
And now, I would like to talk about the evolution of management accounting. Evolution of management accounting can be divided into 4 different stages. The first stage of evolution of management accounting is happened around year 1950, which are the cost determination and financial control. This is happened through the use of budgeting and cost accounting technologies. While the second stage of evolution of management accounting is happened between the year 1965 to 1985. This is basically about the information for management planning and control. It happened through the use of technologies such as decision analysis and responsibility accounting. While for the stage 3, it happened during the year 1985 to 1995. This is basically about the reduction of waste of resources in business process. This reduction of waste of resources in business process are basically happen through the use of process analysis and cost management technologies. And the last stage of evolution of management accounting is happened in year 1995 onwards. It is about the creation of value through effective resource use. This creation of value through effective resource use are basically through the use of technologies which examine the drivers of customers' value, shareholder value, and organizational innovation. Relevance loss is referred to the intangible loss to the firm even though the firm obtained huge profit when using traditional management accounting. For over the last 20 years, management accounting has lost its managerial relevance to the requirement of external financial accounting. Here are some of the examples of managerial relevance, which is product cost, break-even point analysis, and allocation of overhead. The information system and decision-making process would gear towards financial reporting in causing a general shift from cost management to cost accounting. The existing management accounting could not adapt to the competitive environment, management style, production techniques, and organizational structure. This can be seen in the Relevance Course 1987 by Johnson and Kaplan.
Assalamualaikum and hello everyone. I'm Sheikh Muhammad Isfan Amshah. I'm going to talk about the changes in roles of management accountants. Firstly, who is management accountant and what do they do? Management accountants are the person who provides financial and non-financial decision-making information to managers. This is a job which requires partnering in management decision-making, division planning and performance management system, and providing the expertise in financial reporting and control to assist managers in formulation, planning and implementation of the organization's strategy. Most people are confused by the difference of financial accountants and management accountants. They actually have different kind of jobs to do. Most of the financial accountants focus on the company as a whole, which includes external activities of the company, while the management accountants provides a more detailed and disaggregated information about the products, individual activities, divisions, plans, operations, and segregation of tasks. So what we really want to know is the role of management accountants has changed throughout the years and how much did it really change. Firstly, the traditional ways is easy to use. 4 or 5 decades back, the term bean counter has been used to describe as a traditional role of management accountants. This role concentrates on two supporting areas, which is supporting the management decision making as well as monitoring and controlling. Few have suggested, however, these traditional techniques of management accounting are challenged by the more advanced management accounting techniques. They are also facing the same competition from managers who perform the same role. The role that is being done by the traditional management accountant has been assumed that the much work from the traditional ways can be easily done by other professionals also, which are in a different field. For us to really understand the changing role of management accountant, we have to examine and study the nature and the things that make management accountant change. The environment of management accounting, or I should abbreviate it as MA, have changed. It is due to the new accounting systems, corporate restructurings, changes in regulation and legislation, a strengthening competitive market, and a more advance in the information of technology system. These reasons are the one that drive of change of the role of management. Next, one of the things that make management accounting change is the necessity for trust in the role of the customer. The traditional approach of seeking suppliers by formal, legal, and fully specified tenders has been substituted to more subtle partnerships. The emphasis is now on substantial information exchanges between parties, including full knowledge of the cost structures and also production activities of all parties. Today, suppliers may participate in the purchasing organization's planning and may even contribute to designing the production technology and the product itself. Trust is therefore a key component to management accounting, and also the customer relationship is also being transformed by this. Flat and flexible firms founded on a strong digital platform now give customers direct access to collaboration infrastructures. Business may co-create their product with the customer, or they may go further and allow total product creation. Although enterprises may not pre-design the consumer experience with the product, they still invent the broad product concept and orchestrate the achievement of the product's potential via the customer. Lastly, the changes of role of the management accountant is the evolution of change. In the mid-1990s, the flight organization appeared on the horizon. Today, we are seeing a rapidly evolution in their development. The challenge for management accountants to seek solid grounding in knowledge about the technology available. It is anticipated that management accountants will aim to become skilled in appraising the benefits, costs, and contextual issues of different customer supply networks and supply chains and report appropriately. This is a formidable challenge, but it is a fascinating time to be in business also for them. As we see also the technologies that were originally viewed as simply as leisure time activities now becoming essential components of the business process. So it means it's not just a fun activity, it's also becoming a real business nowadays for the company or management accountants.
I would like to talk about the contemporary management accounting tools. In the competitive business environment, every business is catering global customers. Therefore, companies try to reduce their manufacturing with quality to gain the maximum customer satisfaction. Apart from that, advanced management accounting has various methods and tools that will give enough scope are very much helpful for any organization in order to survive them in long run. Total quality management is a tool has been originally known for continuous effort to reduce the cost of the organization. IT is technology which has been evolved and now it has become one of the important part of development of the quality control within the manufacturing. It helps the manufacturing company to create a high quality product with low cost. The TQM has made the management to resolve the quality issue like manufacturing defect, machine error, and slow run of machine. Besides that, it reduces the innovation because it is more focused on consistency in the production. Another major tool of management accounting is benchmarking, which helps to set the standard time for every task for the labor and machinery while producing. After the overall finished product have been produced, then the actual cost and benchmarking will be compared, so the actual difference must be analyzed. It is a process to measure the cost of production or rather profitability of the own company with existing competitors. Benchmarking tools help to bring the healthy competition among the companies to measure the quality, time, and cost during the time of production of the product. Another contemporary management accounting tool is activity-based costing, and it is one of the most prominent methods of costing. It is used in the most of the international companies like McDonald's and Tesco. Some of the other major costing techniques are standard costing, assumption costing, marginal costing, and historical costing. Activity-based costing is very much based on the activities while manufacturing the products. For instance, the production of Coca-Cola, which would be based on the several activities like filling up the bottles, quality check, moving the pallets of bottles, and final product by sealing. With the help of this activity, amount of labor, material, and the time are being calculated in order to fix price of the product. Target costing is another major method of management accounting that is totally based on pricing method. It is one of the effective methods of reducing the large cost of the product during its life cycle. For example, it is one of the tools that help the company like Maggi achieve the consistent profitability in manufacturing. Some of the major processes of target costing are based on the primary research, where the company first review the market cost of product, then form a team to make feature of product, and set a price of the product which lesser than market price. Another most important technique of analyzing the actual cost of production is value chain analysis. Value chain analysis is based on value given at each and every stage of production or processing starting from procurement to finished product. And the major benefit of value chain analysis plays important role in developing the high value for customer in business. The tool is used to analyze the activities, value chains, and evaluation, and also planning.
In conclusion, the business environment will be affected by the increase of market competition, technology advance, and the high education of customers. Therefore, it will affect the evolution of management accounting.
In the evolution of management accounting, it can be divided into four different stages, which is firstly, it happened in between the year 1950 to 1965, which is the cost determination and financial control. The second stage happened in between the year 1965 to 1985, which is the information of reduction of planning control. And thirdly, it happened in the year in between 1985 to 1995, which is the information of management planning control. And fourthly, it happened in between the year 1995 onwards, which is the creation of value of effective resources used. In the evolution of management accounting, it do affect the change in the role of management accountant.
Okay. As she said just now, the evolution of management accounting will affect the role of management accounting. So, there are few ways that they change the role of management accountant. Firstly, they change the traditional ways to the modern ways. Because the modern day accounting does not need the traditional ways because it's useless right now. Okay. Secondly, it's the necessity for trust from customer and the management accountant. It is to create more
customer in order for them to become our client. Okay, lastly is the evaluation of change. It is to make the organization better for future. So this role of management accountant will affect the contemporary tools of management accounting.
So the contemporary management accounting tool is very important for an organization in order them to survive in the long run. So the contemporary tool would include total quality management, activity-based costing, target costing, benchmarking, and also value chain analysis.
So basically